Blessings to all who are watching. In this message, there is going to be a thorough examination of the foundations laid for a new digital dollar. And before giving this message, I would like to reverently pray. Most gracious and loving Heavenly Father, the foundations have been laid for a new digital currency in regards to the mark of the beast crisis to control the buying and selling of individuals. I pray, Heavenly Father, that this message goes forth with great power through the Holy Spirit, that this message be given in meekness, love, and simplicity, and all glory and honor be given to you. In Jesus' name I pray. Amen. And the title of this message is No Buy, No Sell, Part 1. There are going to be several parts to this message series because not everything can be examined in one message. But in this message, there is going to be a thorough looking into the foundation for a new digital dollar. It's in place. The digital dollar is up and running. It's not going to take any time at all to set up a new digital system when the financial collapse occurs. And before going any further, let us read the third angel's message. And the third angel followed them, saying with a loud voice, If any man worship the beast and his image, and receive his mark in his forehead or in his hand, the same shall drink of the wine of the wrath of God, which is poured out without mixture into the cup of his indignation. And he shall be tormented with fire and brimstone in the presence of the holy angels and in the presence of the Lamb. And the smoke of their torment ascendeth up forever and ever, and they have no rest day or night, who worship the beast and his image, and whosoever receiveth the mark of his name. For clarification on the mark of the beast, please refer to the previous 5-part message series. What is the mark of the beast? It's also contained as a playlist. The mark of the beast is Sunday worship by law, and there is going to be a coercive measure put in place, the controlling of buying and selling, a new financial order, and that's what this message is going to examine. But before the mark of the beast is implemented, there must be a crisis, and part and parcel of this crisis is a financial collapse, a complete removal of the fiat currency system that we are accustomed to now. Let us read about this in Revelation chapter 13, the New World Order. And he had power, the United States, to give life unto the image of the beast, and that the image of the beast, church and state, should both speak, and cause that as many as would not worship the image of the beast should be killed. And he causeth all, both small and great, rich and poor, free and bond, to receive a mark in their right hand or in their foreheads, and that no man might buy or sell, save he that had the mark or the name of the beast or the number of his name. Many Christians interpret the new financial system as being the mark of the beast, that if you accept the new digital dollar, you are receiving the mark of the beast. This is not true. Although this measure will be put in place to coerce people into accepting the mark of the beast is Sunday worship enforced by law. This new financial system is coming in quickly, and we need to be prepared now. Here is a short video from a conference in the year 2022 in regards to the new blockchain currency system.
Are we ready for a new world order?
I remember talking to an Australian diplomat at one point about this break between the U.S. and China, and said, both sides are going to say, whose team are you on? And he said, our job is to make sure the question never arises. But the question has arisen. And so I think we have to go deeper. And it's not about the U.S. versus China. It's about what underpins a world order is always the financial system. I was very privileged. My father was an advisor to Nixon when they came off the gold standard in '71. And so I was brought up with a kind of inside view of how very important the financial structure is to absolutely everything else. And what we're seeing in the world today, I think, is we are on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new accounting is what we call blockchain. It means digital. It means having a almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on. It also raises huge dangers in terms of the balance of power between states and citizens. In my opinion, we're going to need a digital constitution of human rights if we're going to have digital money. But also, this new money will be sovereign in nature. Most people think that digital money is crypto and private, but what I see are superpowers introducing digital currency. The Chinese were the first. The U.S. is on the brink, I think, of moving in the same direction. The Europeans have committed to that as well.
In order for this new financial system to come in, there must be a collapse of the U.S. dollar. Why? Because the U.S. dollar is the world reserve currency. But this doesn't mean that the United States is going to fall completely. The United States will become part of a melting pot of digital currencies, a new world order. And how close are we to this financial collapse? It is at our doorsteps. Now let us go into the examination of the BRICS coalition. We see here BRICS digital currencies. BRICS is composed of Brazil, Russia, India, China, and of course South Africa. This coalition has been around for quite some time, but it's only been within the past 2 years or so that there has been rapid advancements in regards to the BRICS coalition having their own digital currency to do cross-border trade, moving away from the U.S. dollar as the world reserve currency. Now let us examine the importance of these measures in regards to the new world economy, because for quite some time the United States has been dominant because the United States dollar is the world reserve currency, and it's also directly tied to petroleum. Here's an article, The Untold Story of the U.S.-Saudi Petrodollar Partnership. Nixon's decision in 1971 to withdraw the United States from the gold standard greatly influenced the future direction of humanity. The U.S. dollar rose in importance from the mid-1950s to become the world reserve currency as a result of the need for countries to use the dollar in trade. One of the most consumed commodities in the world is oil, and as is well known, the price is set by OPEC in U.S. dollars, with this organization being strongly influenced by Saudi Arabia. It is therefore towards Riyadh that we must look in order to understand the workings of the petrodollar. After the dollar was withdrawn from the gold standard, Washington made an arrangement with Riyadh to price oil solely in dollars. In return, the Saudis received protection and were granted a free hand in the region. This decision forced the rest of the world to hold a high amount of U.S. dollars in their currency reserves, requiring the purchase of U.S. treasuries. The relationship between the U.S. dollar and oil breathed new life to this currency, placing it at the center of the global financial and economic system. This privileged role enjoyed by the dollar allowed the United States to finance its economy through the simple process of printing its fiat currency, paper money, relying on its credibility and supported by the petrodollar that required other countries to store reserves of U.S. treasuries in their basket of currencies. Ultimately, the reason why the United States economy is still alive today is because of U.S. treasuries. It's actually because of debt. Many countries hold U.S. treasuries, and this supports the propping up of the United States dollar as the world reserve currency. But that is about to change. The United States economy is on the brink of ruin. Its federal deficit is over $36 trillion. And the amount of interest payments that have to be paid on the debt surpasses $1 trillion, which is more than the defense budget. This means that a financial collapse is about to occur, and please continue watching this message. Proof is going to be given. The financial stones have already been laid for a new digital economy, and many people may be wondering, but President Trump just signed an executive order saying that there's not going to be a central bank digital currency in the United States, and that's true. But the central bank digital currency is not the only digital dollar that is being developed right now. How long will the dollar last as the world's default currency? The BRICS nations are gathering in South Africa this August. With it on the agenda, this refers to 2023. There has been rapid developments within the BRICS coalition to move away from the SWIFT system of payment, the payment by which Many countries were settling their transactions in U.S. dollars and moved towards a new system of payment, dumping the U.S. dollar as the Federal Reserve currency. This ultimately is part and parcel of the collapse of the U.S. dollar, but it also must be mentioned again that the United States economy itself is on the brink of collapse. Number one, because of its $36 trillion deficit, but also because of a massive commercial real estate crisis that is also at our doorsteps. India ties up with United Arab Emirates to settle trade in rupees. This has already been going on. Digital cross-border trade in the various currencies of these regions, not in U.S. dollars. Another article, digital yuan used for international oil transaction. India state refiner integrates blockchain technology. This was back in October of 2023. There has already been digital transactions between these countries not using U.S. dollars. Here is a short news article in regards to this transaction that occurred in 2023.
Now let's talk about Saudi Arabia. It is deepening ties with China. Today they've signed a deal to trade in their native currencies and sideline the US dollar. The deal is worth almost $7 billion and it's valid for 3 years. This is basically a currency swap agreement, a financial contract between the central banks of China and Saudi Arabia. And this is what it means. Henceforth, China's central bank will maintain a reserve of the Saudi riyal and the Saudi central bank will keep China's yuan. So when a payment needs to be made, these banks will just use the native currencies. The Saudis will settle their bills in yuan and the Chinese will use the riyal. It's a win-win for them. So who is the loser? The US dollar. This is another attempt to de-dollarize. And China has been pushing for this. You see, China is Saudi Arabia's biggest trading partner, mainly due to the oil purchases. This pact, though, is mostly about non-oil trade. At the same time, it is a step towards de-dollarization. It sets a precedent for other regional players like the UAE and Iraq. These are major oil producers. They're exploring ways to conduct non-oil trade without using the dollar. And the yuan might appeal to them. And China has been busy promoting it. Before the deal with Saudi Arabia, China had 29 swap agreements with various countries. The list includes key West Asian powers as well, like Qatar and Egypt. And now Saudi Arabia is the latest to join. Just another step in their deepening relationship, the one between Riyadh and Beijing. In March, Saudi Arabia normalized ties with Tehran. It was a pact brokered by China. In August, the BRICS decided to expand. And here too, China pushed for Saudi inclusion. And this week, Saudi Arabia's foreign minister visited Beijing seeking China's support to de-escalate the Gaza war. Plus, they have booming bilateral trade, mostly thanks to China's large crude orders. Let's look at some numbers. Last year, China paid $65 billion to Saudi Arabia. This was just for the crude purchases, $65 billion. It made up about 83% of the kingdom's exports to China. Although they're thinking beyond crude oil now, the Crown Prince of Saudi Arabia wants to diversify his economy, to end the dependence on oil revenues, and China could help MBS realize this vision. Last year, Xi Jinping visited Riyadh. Several agreements were signed. They were valued at about $50 billion, $50 billion. And more deals were announced this year when Riyadh hosted a major event, an Arab-China business summit. 30 agreements were signed here, spread across sectors like technology, renewables, agriculture, real estate, mining, tourism, healthcare. And now we have a yuan-riyal swap agreement. It could become the vehicle to enable these investments. So instead of a sudden shift, they're slowly moving the dollar out of their equation. The American currency might be the present for Riyadh, but the Chinese yuan could be its future.
As you can see, digital transactions in native countries have already been occurring. And this is a moving away from the US dollar. It's called de-dollarization. Now let us go back into the year 2024, when the BRICS actually set up their own foundational payment system for cross-border trade. BRICS plans multi-currency system to challenge US dollar dominance, understanding Russia's proposal. These movements are huge, and although it seems that the U.S. dollar is strong, it's actually at its tipping point. Let us look at another article, the deep dive, BRICS pay debuts, threatening U.S. dollar dominance on global markets. This was introduced at the BRICS summit in October of 2024. That was just last year. Here is another video highlighting this.
BRICS Pay, touted as an alternative to the US dollar, has the potential to revolutionize global finance by allowing BRICS nations to make cross-border payments more efficiently using their own currencies. But what exactly is BRICS Pay, and why is it so significant? Well, BRICS Pay is a proposed decentralized payment system developed by BRICS nations, Brazil, Russia, India, China, and South Africa, recently expanded to include Egypt, Ethiopia, Iran, and the UAE. It aims to enable cross-border transactions in local currencies without depending on the US dollar or traditional Western-led payment system like the SWIFT. Geopolitical tensions, particularly Western sanctions on countries like Russia, have accelerated the push for a new payment system. After the invasion of Ukraine in 2022, Russia was cut off from international capital markets and had its dollar and euro reserves frozen. This financial isolation led Russia to call for an alternative to the current global financial system, dominated by institutions like the IMF and the World Bank, which they argue favor Western interests. The BRICS Pay system leverages the payment infrastructure already in place within BRICS nations. For example, Russia's MEAD network and India's UPI. BRICS Pay will use blockchain technology to validate transactions, ensuring security and transparency. It is designed to be faster, cheaper, and free from external interference. One of the key features of BRICS Pay is its ability to facilitate transactions in local currencies, including the Russian ruble and Indian rupee. This means that businesses and individuals in BRICS nations can make cross-border payments without needing to convert their currencies into US dollars. The new system brings numerous benefits. It eliminates the risks associated with the traditional banking system, such as credit risks and delays caused by reliance on Western-dominated platforms like the SWIFT. By using decentralized ledger technology, it also enhances the security and efficiency of transactions. BRICS now represents 45% of the global population and 37% of the world economy. With the expansion of BRICS and the development of BRICS Pay, these nations are pushing for a multipolar world order, challenging the dominance of the dollar in global trade. Often seen as a geopolitical rival to the G7 bloc of advanced economies, BRICS aims to create a financial system that works for emerging markets, offering alternatives to Western-led institutions like the IMF and the World Bank. As the world increasingly moves towards digitization, systems like BRICS Pay could become more critical in shaping the future of global payments and boost the efforts of de-dollarization. By fostering financial cooperation between member states and reducing dependency on the US dollar, BRICS Pay could pave the way for a more decentralized and equitable financial system.
Notice that the goal of the BRICS coalition is to create a multipolar world. To create a new digital system where the United States dollar is not the top gun currency. And that's exactly what's happening right now. And based on what's happening in the United States, this crisis is just upon us. When the financial collapse actually occurs, the United States will join in a melting pot of world digital currencies. So now let us go to the United States and see the foundational premises that have already been laid within the past few years or so. United States digital currency, we see here a logo for FedNow, instant payments. This new system was set up in the summer of 2023. Although it is not a central bank digital currency or a stablecoin, it actually lays the foundation for an instantaneous digital system that can track every single payment and transaction within a large database. Here is the executive order that was signed by President Biden in the year 2022. Executive order on ensuring responsible development of digital assets. If we are not on the verge of a new digital economy, why was the United States government looking into this and actually developing the foundational stones necessary in order to enact a digital currency? Here is a short video in regards to this executive order that was signed by President Joe Biden at this time.
U.S. President Joe Biden Wednesday signed an executive order requiring the government to assess the risks and benefits of cryptocurrencies and to explore the creation of a digital dollar. The president's order requires the Treasury Department, the Commerce Department, and other key agencies to prepare reports on the future of money. It's a first step toward coordinated government regulation of the now $3 trillion industry. Administration officials said oversight of the booming sector is essential to ensure U.S. national security, financial stability, and to fend off the growing threat of cybercrime.
What we have today is incredibly thoughtful.
Kristen Smith, executive director of the Blockchain Association, says the industry welcomes the approach.
What we want is a measured, methodical approach to analyzing this space. What we don't want are rushed policies that are pushed through last minute without open discussion. And in order to get a menu of policy solutions to consider, you really have to start with the type of analysis that this executive order is asking for today. So I think the asset class is at a valuation that merits this type of investigation. It's not too late. It's also not too early. I think.
White House officials said the U.S. was taking great care to decide whether and how to move forward with a U.S. central bank digital currency, or CBDC. According to the Atlantic Council, 9 countries have launched central bank digital currencies, and 16 others, including China, have begun development of such digital assets, leading some in Washington to worry that the dollar could lose some of its dominance to China. Bitcoin surged on the news of the executive order, calming market fears of an immediate crackdown on cryptocurrencies.
Please note that this executive order was signed in early spring of 2022. And only a year and a half later, the FedNow instant payment system was set up, a system that has a perfect tracking record of all transactions. Federal Reserve officially launches new FedNow instant payment service. This is a very convenient service, and for many customers, it was applauded. But this is foundational in regards to a digital currency. In 1971, the United States went off the gold standard. Why? Because up until that time, there was the belief anyway that every single U.S. dollar was backed by gold. But that wasn't the case. Now we have runaway inflation, a $36 trillion federal deficit, and interest payments on that debt higher than the U.S. defense budget. There's $7 trillion in spending, and there's also a $2 trillion deficit. This is like somebody that is spending $7,000 per year with a $2,000 credit card limit. You can't keep doing this. This is unsustainable. Towards the end of this message, you are going to come to find out that there are gold runs going on right now all over the world in regards to central banks. This is not in the mainstream media. The elite and members of high governmental positions know that a collapse is coming. Here is a short video in regards to the FedNow instant payment system that was set up in July of 2023.
In your bank account, the Federal Reserve announcing it has gone live with its new FedNow instant payment system, a system that should allow households and businesses to send payments and receive money immediately without those troubling 3-day holds on checks and waiting for payments to clear in the sender's account and waiting for the bank to open on Monday or after a holiday. The FedNow system is an instant payment system. It's available 24/7, 365 days a year. To begin with, 35 banks and 16 service providers have already signed up. Those banks include things like JP Morgan and Wells Fargo, as well as smaller credit unions and other banks. Unclear if the banks are going to charge for this instant payment. They are charged, but they may or may not pass that along to consumers. Fed Chair Jay Powell saying in a press release, over time, as more banks choose to use this tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. This doesn't eliminate the PayPals and the Venmos of the world or Zelle. Theoretically, they could use the FedNow system, which is a bank-to-bank system, to send payments, but it's unclear, guys, if those services now face a new challenge from banks of all sizes that can offer similar services. Sarah?
But bottom line, faster payments, good for consumer, right, Steve?
I think so, Sarah. That's exactly right. I think you get there and you don't have those holds on the checks. Look, if you have money in your account and you send money to somebody else with an account, obviously they can take that money out, but there's actually a hold on that account. It's really for people who don't have that money on account. Say a small business guy who's doing a big project, gets a payment, has to wait till that payment clears. It could really help them out.
The FedNow instantaneous payment system was a foundational stone laid in the summer of 2023 to pave the way for a new digital dollar. And once again, people watching may be thinking, but Congress and Donald Trump say that there will not be a central bank digital currency in the United States. And that's true. But a CBDC is not the only digital currency that is active right now. Now let us examine the looming banking crisis in the United States. It's not only de-dollarization coming from the BRICS coalition that Americans need to be concerned about. The biggest crisis is actually on American soil when it comes to commercial real estate loans. During the pandemic, many office buildings were left desolate because people had to work from home. And even after the pandemic restrictions were removed, people did not return to these offices. Therefore, the loans on these office spaces are going to come due within the next year or two. And there's no one to pay them. This is a huge systemic problem. Here is an article, Why Economists Are Warning of Another U.S. Banking Crisis. And this was published in February of 2024. And you're going to hear from one of the Treasury Department leaders yourself, Jerome Powell, that even he is not ignorant of a systemic, small and regional banking crisis in the U.S. Please watch.
Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk. And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me see. I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings, not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And, this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Jerome Powell mentioned that there will be bank failures, but it's not going to be the big banks that are affected. This is going to be the centralization of wealth and power, where all of the large banks swallow up the toxic assets of the smaller regional banks. And this has to do with the looming real estate crisis. Far worse than the 2008 crisis. This crisis is actually going to be similar to the Great Depression of the 1930s, not a worldwide recession that occurred in 2008. And are these bank failures going to occur? Yes, because we already experienced this ripple effect in the early spring of 2023. Why Silicon Valley Bank collapsed and what it could mean. There were multiple bank failures in the late winter and early spring of 2023, and the Federal Deposit Insurance Corporation was able to bail out and help many customers. But please take note of this fact. The Federal Deposit Insurance Corporation, the FDIC in the United States, can only insure less than 3% of all of the deposits held in all of the banks. It's just like car insurance. If a person here and a person there gets into an accident, the insurance company can pay the losses. But what if every single person gets into an accident all at once? Can the insurance companies pay for the repairs on all the cars? Absolutely not. We have been lulled into a false sense of security. The FDIC is for a here and there rupture within the financial system. It is not designed to handle a systemic banking collapse, and that is about to happen. Here is a short video in regards to the Silicon Valley Bank collapse in 2023.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
The Silicon Valley Bank collapsed on March 10 after a run on deposits doomed the tech-focused lenders' plans to raise fresh capital. This prompted U.S. regulators to step in with emergency measures, including seizing another bank 3 days later, in a bid to ease fears that depositors might pull their money from other lenders. WSJ banking reporter Rachel Ensign explains how this crisis unfolded and what could happen next.
During the pandemic, Silicon Valley Bank had gotten all of these deposits. Their deposits tripled. It was a huge influx. And they did what banks do. They took some of the deposits and made loans, but they also invested a lot of them in securities, which are pretty safe. Some issues had been bubbling under the surface at Silicon Valley Bank since the Federal Reserve started raising rates. When rates rose, the bonds fell in value. It's not a big problem for you unless you have to go and sell the bonds. But deposits started leaving the bank faster than they anticipated, and they had to sell their bonds and take a very big loss. The bank made an announcement on Wednesday night that it needed to raise capital and was planning to do that the next day. The investors completely freaked out, sold off the stock, and then a bank run started where people tried to withdraw $42 billion in deposits just in that one day. And by Friday morning, it was seized by regulators. The regulators have responded in a way that they're hoping stems the panic. The Fed said, we're going to be offering this lending facility that's a backstop. We're going to be insuring all of the deposits effectively of this bank that failed. The collapse matters because it could have broader economic effects. There was the risk that this panic would spread to other parts of the banking system. We saw some really significant news with some of the banks that investors were most concerned about last week. Most notable, Signature Bank, a New York-based bank, was also seized on Sunday night. It is the third largest bank failure in U.S. history. And First Republic put out a statement saying they'd gotten some extra money from the Federal Reserve and also from JP Morgan. They're hoping that that reassures their investors and their depositors. The key thing to watch for is the panic over? That's the big question. Do people stop pulling their money out? Do investors and customers are they reassured in the way that the government would like them to be?
Just imagine that the mainstream media told everybody in the United States that a financial collapse was coming in. Everybody would panic and they'd run to the bank machines, they'd run to the tellers to get as much money as possible. But what if the money that you have saved in your bank doesn't even exist? What if your bank is using your deposits to enter into toxic risks financially? This is exactly what is happening right now, particularly when it comes to the commercial real estate loan crisis in the United States. The mainstream media is not going to tell millions and millions of Americans that a digital currency is coming in. The crisis has to be completely unexpected, and that's exactly what is going to happen. Here's another article. U.S. commercial real estate is headed toward a crisis. There are a few leaks here and there in regards to the looming real estate crisis. Over $1 trillion in unaccounted loans are due in the year 2025 and even in the early 2026 year. These assets are toxic and they will lead to a systemic financial collapse, particularly when it comes to small and regional sized banks. The large banks will gobble up all of the losses, and then we will enter into a melting pot of digital currencies. And the United States digital currency, which will come in, will be backed by gold. Towards the end of this message, you are going to come to find out that there is a massive revaluation of gold all over the world occurring right now, which means that the people in positions of high government authority, as well as the elites, know what is coming. But they don't want the general public to know what is coming because that will produce panic. Here's a short video from a financial expert warning of the tsunami coming financially from the commercial real estate crisis in the United States.
Commercial real estate is a piece of our business, right? No, not the majority of our business. And what we find is about 40%, 45% of commercial mortgage debt has been issued against offices and against multi-family properties. The logistics business, the warehouse business, a whole bunch of the other commercial real estate business are relatively healthy. But in office, particularly if you think about U.S. office, in U.S. office, you've got vacancies of close to 20%. When those offices are vacant and you ask yourself, hey, I got a new tenant coming in, you've got to pay a lot of money to fit out the building and in free rent. So when we look at a whole bunch of U.S. office real estate, there are problems galore. We must have looked at 100 deals over the course of the last 6-9 months. We've made one investment so far. It's somewhat protected, it's somewhat sheltered. So when you look at office property, it's really hard to underwrite.
Because it's not troubled enough for you? Or no? It's too troubled.
It's too troubled.
Yeah, okay.
Right? You've got in office in the U.S., there's almost a tsunami coming through. You don't see it in the headlines quite as much, but underneath those debt maturities we were talking about, they are causing a tsunami.
And that's not enough to provide this cathartic moment?
It's
small.
It is.
The financial expert mentioned that there is a tsunami coming in regards to overdue commercial real estate loans. And because these owners of the office space cannot lease or rent these office spaces at higher interest rates because the Federal Reserve has been cutting interest rates, these loans go belly up. And who's going to suffer? It's not going to be the elite. It's not going to be the big banks. It's going to be regular people like you and me. Here is an article again. Blank check company aims to buy failed U.S. banks. Now, if there is a blank check company, an organization that's willing to buy failed U.S. banks right now, this means that there are people who are analyzing the market, particularly the stock market, knowing that a collapse is imminent. Here is another video in regards to the huge amount of money that is owed in regards to commercial real estate loans in the United States and how this points us to the quickly coming economic crisis.
You've seen them, the towering empty office buildings with the lights off and the doors locked. But what if I told you that all of those empty buildings were a ticking time bomb, and when it explodes, it could bring down the entire economy and your finances with it? The delinquency rate for office loans has surged to 10.4%, just shy of the peak of what we saw during the 2008 meltdown. And the speed of the crisis, well, it is the fastest growing that we have ever seen.
There's also a new study out that says almost 3/4 of companies are cutting or completely getting rid of office space.
Every single regional and local bank across the country is now assessing their loan assets and liabilities, and as a result, they're going to be more discerning about extending credit to commercial real estate.
Something should be done because there are so many commercial real estate loans that are coming due between now and 2025.
Today in this video, I'll break down just how bad the situation has got, how all of these empty offices could cause a ripple effect through the economy, hurting you, and most importantly, how you can protect yourself. Despite pronouncements by landlords earlier this year, the commercial real estate had bottomed out, we continue to see vacancies rise. But it wasn't always this way. In 2019, we saw a very different picture being painted. Big banks fabricated a lie. Go figure, that there was an office shortage, prompting companies to lease space that they didn't really need when rates were near zero, willing this office shortage propaganda into existence just in time for the pandemic to hit. But many wrongfully assumed that vacancies from the pandemic would be temporary. Even as businesses call their employees back in, vacancies continue to rise, exposing the truth that many of these office buildings, especially the older ones, are worth far less than previously priced, sometimes 50–70% less than they were on paper. Now today, with historic vacancy levels, landlords are choosing to stop making their payments because they cannot afford to. They are not generating enough in rent to cover interest and other expenses, hence the rising delinquency rates. But as these delinquencies rise, who actually are holding the loans? Well, simply put, as more landlords default, it's banks that are holding these loans that are at risk. But what no one is looking at is the exposure to commercial real estate that smaller and regional banks are holding. With the largest banks having about 50% of their risk capital tied up in commercial real estate, the picture is far bleaker when we look at small and regional banks, accounting for 150% and 228% of their total risk exposure, far above what anyone would consider a safe risk exposure. If these loans go bad, which they already are, then banks could fail. And when banks fail, it impacts everyday Americans, which is why this isn't just an office vacancy problem. Do you remember 2008? What happened? It started with bad home loans. Today, it's bad office loans. Different buildings, same potential for disaster. Cue the domino effect in 4 parts. Number 1, banks fail, leaving your savings at risk. As the stock market crashes, any investment you have tied up with financial institutions leaves you vulnerable. Number 2, banks pull back on lending to businesses and individuals. Let me ask you, what happens when a business doesn't have access to a loan? Well, we see layoffs increase. That means your job, your friend's job, your family member's job are all at risk of disappearing. Number 3, if commercial real estate collapses, it drags down the value of homes and properties nearby, meaning your home could be worth less even if you've done nothing wrong and everything right. And last but not least, number 4, can you guess what it is? Because someone out there is sitting there thinking to themselves, well, none of this matters anyway, because the government will just bail us out. Well, what have we learned from the past? If the government were to step in, we would see inflation grow from where it already is today, meaning that the dollars in your wallet, your savings, your retirement would all be worth less. But how close are we? Anyone who thinks that this is temporary is sadly mistaken, because there is nothing temporary about the glut of excess office buildings, especially the older buildings, as a result of years of overbuilding and companies hogging space at near zero interest rates that they had no use for in the first place. Vacancies are not going away, but that means that U.S. banks are facing a reckoning. Over the next year and a half, over $1 trillion worth of commercial real estate is coming due, meaning that the chances are heightened of hundreds of banks failing simultaneously. This is scary stuff. And what is their solution? Survive until 2025. That has been the catchphrase, under the assumption that vacancies would go up and interest rates would come crashing down. But as we start the new year, what are we actually faced with? Smaller interest rate cuts, nowhere near what these banks were hoping for. And even if miraculously interest rates come all the way back down to zero overnight, most of these landlords are still unable to keep up with payments. The rate of escalating vacancies has led to the fastest 2-year spike in delinquencies in history, meaning that this crisis isn't slowing down, it's speeding up. The clock is ticking on these banks who are not facing the truth about these commercial real estate loans. So far, they've extended and pretended, changing the terms of the mortgages, allowing for grace and more time in an attempt to mitigate their losses, but they can only play kick the can down the road for so long. If GDP growth is weaker than they're telling us, and unemployment ticks up, and interest rates stay elevated, a cascade of banking losses could create a financial upheaval that would impact all of us. In fact, this is how bad it is. All it takes is a 10% loss on commercial real estate loans to render 100 banks representing over $1 trillion in assets undercapitalized. But if that number jumps up to 20%, a 20% loss on commercial real estate, now we have over 900 banks across the United States who are left undercapitalized. And as I've outlined before, do not count on the Fed or the FDIC or even the larger banking institutions to come in and save hundreds of banks simultaneously. It's just not going to happen that way.
Please take note that the interest payments due on the United States federal deficit exceeds $1 trillion. And the total amount of delinquent loans coming in 2025 is over $1 trillion. The FDIC can only insure less than 3% of all held deposits within all banks. A bank here and there fails, sure, but not a systemic bank failure. The government cannot afford this next bailout. This is going to be far worse than the 2008 financial crisis. It's not only de-dollarization coming from the BRICS coalition that threatens the U.S. dollar, it's the United States itself that's the biggest threat in regards to this quickly coming financial collapse. More than meets the eye. The U.S. dollar has been the world reserve currency for nearly 100 years. U.S. treasuries are currently being dumped by very powerful nations. The BRICS coalition has already laid the foundation for their own blockchain cross-border payment system. The U.S. dollar cannot survive on its own. Over $1 trillion in commercial real estate loans are due in 2025. Because the loan holders cannot rent out these vacant office spaces at higher interest rates, losses must occur. The 2008 financial crisis saw a $475 billion bailout for toxic bank assets, approximately $650 billion adjusted for inflation today. When the quickly coming financial crisis hits, far worse than 2008, the U.S. government will not be able to bail out all the failed banks because of the rising federal debt, over $36 trillion. The current system of fiat currency cannot be sustained. There must be a complete financial collapse of the current U.S. dollar and a great currency reset whereby the U.S. dollar will become digital and be backed by gold and become part of a melting pot of digital world currencies already up and running as per the BRICS coalition. The Federal Deposit Insurance Corporation in America can only insure less than 3% of all customer-held capital assets within banks. Systemic bank failure deposits cannot be covered. You are not going to hear this in the mainstream media. The financial collapse is one factor that precedes the mark of the beast crisis, but there are going to be many more factors. This is going to be a stupendous time of trouble, and God's people need to be prepared. They need to be filled with the Holy Spirit to go through what is quickly coming upon us. Here is a picture as of March 6, 2025 in regards to the United States debt. Over on the top left-hand corner, you can see that it is approaching $37 trillion in regards to the federal deficit. But I've highlighted with a yellow arrow in the center pointing up to the interest on the debt, which exceeds $1 trillion. Over to the left of the interest on the debt, you see the defense budget, which is $884 billion. The total interest due on the United States federal deficit exceeds that of the defense budget. This is a serious problem. As previously mentioned, you have a $2,000 credit card limit and you're spending $7,000 a year on that debt. It is unsustainable. But let us now examine the pushback in regards to a digital dollar in the United States. Although this seems to be the solution, and it seems to calm the hearts and minds of many people in America that a crisis isn't coming, let us not be fooled. U.S. House approves bill to block Fed from launching CBDC. This seems to be noble. People are calm because, well, even though there's a push for a digital dollar, and even though the BRICS coalition is pushing de-dollarization, and even though there's a looming commercial real estate crisis, we have nothing to worry about because our government has blocked the setting up of a central bank digital currency. But a central bank digital currency is not the only digital currency on the market and active right now. Let us go to President Trump's recently signed executive order and look deep into what was written. Strengthening American leadership in digital financial technology. I'm only going to read what's highlighted in green to compare what the president is mentioning in regards to digital currencies at the bottom here. Promoting and protecting the sovereignty of the United States dollar, including through actions to promote the development and growth of lawful and legitimate dollar-backed stablecoins worldwide. The president is promoting the development of stablecoins. Although stablecoins do not stem from a central bank, they are just as programmable and trackable as a central bank digital currency. Do not be fooled with what's happening right now. Now on the next page, taking measures to protect Americans from the risks of central bank digital currencies, which threaten the stability of the financial system, individual privacy, and the sovereignty of the United States, including by prohibiting the establishment, issuance, circulation, and use of a central bank digital currency within the jurisdiction of the United States. It's only a central bank digital currency that President Trump and Congress are pushing against, but not the development of alternative digital currencies, such as stablecoin. This is a deception. And please take note that when there is no crisis, like right now, it's very easy to push back the use of a CBDC. But what if the entire financial system collapses and there is no other alternative except a digital currency. Here's a short video in regards to the United States' recent move to block a CBDC and the implications in regards to de-dollarization, implications in regards to the United States government shooting themselves in the foot.
U.S. President Donald Trump issued an executive order last month halting the development of a U.S. central bank digital currency, or the CBDC. This move, aimed at regulating digital assets, has unintentionally opened the door for global alternatives, most notably China's digital yuan. With over 98% of central banks worldwide engaged in CBDC development, the U.S. ban risks isolating the dollar from a rapidly evolving financial landscape. Experts warn that this could accelerate de-dollarization as countries seek faster, more efficient cross-border payment solutions beyond the U.S. dollar. China's digital yuan, or eCNY, has been in development since 2014, making the country a global leader in CBDC adoption. Despite competition from private players like Alipay and WeChat Pay, the digital yuan recorded transactions worth 7.3 trillion yuan, which is approximately $1 trillion US, by July of 2024. Nearly 180 million personal wallets have been opened, reflecting China's aggressive push. Initiatives like Project M-Bridge, involving Hong Kong, Thailand, the UAE and Saudi Arabia, are expanding the digital yuan's cross-border reach. Meanwhile, agreements with global banks, including Standard Chartered, signal China's intent to internationalize the eCNY. The digital yuan's growth aligns with China's broader strategy to increase the yuan's global footprint. In 2023, the yuan surpassed the US dollar in China's bilateral trade settlements for the first time. By mid-2024, it ranked fourth globally in payment volumes, ahead of the Japanese yen. The petro-yuan is gaining traction in crude oil transactions, challenging the dominance of the petrodollar. Now, China's cross-border interbank payment system, or the CIPS, is key to this shift, with global banks like the HSBC joining as direct participants. As the US steps back from CBDC development, China is positioning the yuan as a serious contender in reshaping global finance.
If the rest of the world is rapidly developing alternative forms of currency in a digital form, and the United States blocks a CBDC and wants to hold on to the current fiat system, isn't this shooting yourself in the foot as the United States government, because the rest of the world wants a digital currency? This is a planned financial collapse. Although it seems that the United States government is trying to protect itself from disaster, it's actually isolating the United States Federal Reserve currency from other currencies, therefore trying to survive on its own. Please remember that as the Federal Reserve currency of the world, the United States dollar cannot survive on its own. Now let us examine a wolf in sheep's clothing. Very recently, Donald Trump signed an executive order blocking the implementation of a central bank digital currency in the United States. But within that same executive order that we just read, he also promotes the use of digital-backed stablecoins, which are also trackable, programmable currencies, which keep a perfect record of every single transaction that a person does. Here is a short video exposing the fallacy of blocking a CBDC, but at the same time promoting the use of other digitally based assets, including stablecoin.
We are focusing on one of President Trump's latest executive orders, the banning of a digital dollar. Why this 180? We're going to find out why from Matthew Piepenburg. He is my guest today. Matthew, always good to be with you. Welcome back to the show.
Well, thanks, Danielle. I'm really excited to swap thoughts with you again. Certainly the CBDC new orders and all the Bitcoin noise and AI, there's a lot to talk about, but yeah.
Well, I was just speaking to our mutual friend, Frank Juster, about this. We were texting back and forth on this, and he's like, you got to ask Matthew about this. And I'm like, I absolutely will. Obviously, I want to talk a lot of other topics with you, but let's start with this one of Trump's digital dollar ban. I'm pulling up a Reuters article here, which suggests it's just going to give China and Europe, future CBDCs free reign here. and it basically leaves the field wide open. Why the backtrack? I mean, the U.S. was doing all these, pilot tests with CBDCs. We all thought we were moving in this direction. Why the halt on this?
Well, look, it's not to take any wind away from the new excitement and flavor of optimism coming out of the Trump White House. And I'm not trying to be anti-Trump. I'm cynical about politics in general. I have to caveat that, left or right. I wrote an article exactly 2 years ago called The ABCs of CBDC. I said, beware of technical innovations being the cure-all, just like human innovations. There's not a cure-all. And politics, tech, AI, they're all kind of wolves in sheep's clothing. In terms of the specific question about having an executive order with a nice signature and a camera in front, we're not going to go down the CBDC route of programmable, seizable, controllable digital money. We're not going to do that. It's optically fantastic. Say that with the executive order in your left hand, but what's happening with the right hand, whether Trump's aware of it or not, with the right hand, we're making a massive effort in the digitalization and tokenization of all things, through the Ripple XRP railway of all things digital and tokenable and ISO compliance, ISO 222, blockchain compatibility, all this tech that's going on. As you're publicly decrying CBDC with your left hand, you're rolling out a bigger play with Tether in your right hand and stablecoins. And stablecoins, to me, are, and Tether in particular, is just CBDC by another name. It's not issued by a central bank or the two-tier banking system. It's introduced by the libertarian liberals of Silicon Valley and the highly integrated DC military industrial complex, DC political complex, which is so techie confusing intentionally that you can mock and get rid of the CBDC headlines by saying we're never going down that route, while at the same time you're rolling out the XRP highway, the digital highway, and in particular the Tether highway, which Tether is still just CBDC by another name. It's just as programmable. It's just as seizable as a CBDC. It's just not issued by a central bank. And again, Tether is only just beginning, and XRP and these other things are only just beginning. They've been in play long before Bitcoin came out. I think that's creepy that the same NSA, Intel organizations that rolled out Ripple and the digital highway before Bitcoin was rolled out have also rolled out stable coins. And there is a direct connection between Bitcoin and Tether. There is a direct connection between the digitalization of all things and the centralization of all things. I think all of this is, again, a wolf in sheep's clothing, and we can get into the weeds on Bitcoin and XRP and Tether. But again, Tether is a CBDC. Right now, it's only 0.5% of publicly held debt in it, but the idea is to create a balloon in Bitcoin deliberately. And the idea is to attract attention and interest in stable coins in general, and Tether in particular, because it's just one more source. Tether is backed largely primarily by U.S. Treasuries. It's one more way to mop up otherwise unloved, weaponized, unwanted U.S. IOUs, U.S. Treasuries. And again, it's only 5% of publicly held U.S. debt, but as Tether gets bigger, it takes the pressure off the Fed to have to print money to buy those treasuries. You can have the public do it for you by creating a balloon in digital memes, digital headlines, the digitalization of all things, create a meme and a balloon and headlines in Bitcoin, which is also a complete contradiction to the White House 3 years ago or Trump 3 years ago. But we can get into that. But the short answer on CBDC is, look, my opinion, very simple, is Tether is CBDC. It's just not coming from a central bank. It's coming from, another source. It's coming into the open markets, but it is not from a central bank, so it's officially not CBDC, but it is just another form of it. And it's very seizable, very programmable. Yep.
And very trackable, traceable. They know every movement.
Very trackable.
Right?
All the things that were scary about CBDC are just as scary in Tether.
So it's like you said, a wolf in sheep's clothing.
All things that are within a CBDC are the same with Tether stablecoin. President Trump is blocking the implementation of a central bank digital currency in the United States backed by Congress, but also promoting the development and use of Tether stablecoin. This is a deception. Many people are uneducated and they don't understand what direction we are heading in. But the whole purpose of this financial collapse is people are going to be unguarded. They're not going to see it coming, and it's going to happen unexpectedly. So when the actual collapse occurs, no matter how much uprising there is going to be a desperate move to change the current system of fiat currency into a digital system. The U.S. dollar will become part of a melting pot of digital currencies all over the world. But also, one more thing must be mentioned before the closing of this message. These new digital currencies are going to be backed by gold. Gold revaluation means dollar devaluation. What we are seeing right now all around the world is the massive movement of physical gold into the vaults of central banks as well as the U.S. stock market. Now, why is this happening all of a sudden? Because those who are in the know in regards to economic trends see that there is a huge financial collapse coming. And they also realize that there is going to be a dramatic, quick move to a digital dollar. This is part and parcel of prophecy being fulfilled in Revelation chapter 13, that those who do not accept the mark of the beast will not be able to buy and sell. There will be an economic system set up to control the buying and selling of all people and keeping a track of every single transaction. That means those who do not accept Sunday worship by law will be cut off from society by the pushing of a keyboard button. Here is another video in regards to the quick revaluation of gold and the implications in regards to the financial reset.
Everyone is talking about a gold revaluation. How high will prices go? Who will pull the trigger? And when will it happen? But the question that you should be asking is, why is gold being revalued in the first place? The truth is, a formal gold revaluation is like a check engine light flashing on your dashboard. It's not the problem itself. It's a warning that something is seriously wrong under the hood. But the real problem? The accelerating collapse of the dollar, government overspending, and a financial system that's run out of road. Governments don't just revalue gold for fun. They do it because currency is failing, because confidence is slipping, because the system cannot sustain the weight of its own debt. But if you're only focused on gold revaluation's next price, then you're missing the bigger picture of why and what's coming next. A monetary reset, the ramifications of which could impact every aspect of life as we know it. So what's really going on under the hood? What does a gold revaluation tell us about what's coming next? And most importantly, how can you use this information to protect yourself? Let's get into it. Gold has been the ultimate store of value for thousands of years. And every time a country's currency starts to collapse, what do? They turn to gold. But don't just take my word for it. Look at history right here in the United States. In 1933, the U.S. was still in the depths of the Great Depression. The banking system was collapsing, and they needed a way to regain control. So what did? They revalued gold from $20.67 an ounce to $35 an ounce, nearly a 70% increase. But that wasn't all. Then came 1971. The Bretton Woods Agreement had held the U.S. to a gold standard, but the U.S. had printed far more dollars than there was gold. Foreign countries caught on, and they cashed in their dollars for gold, draining reserves at a rapid rate. Notice any parallels to today? We'll talk more about that in a minute. But first, what did Nixon do? Well, he cut the tie, temporarily suspending and delinking the dollar from gold. Of course, we know today it wasn't temporary, and it wasn't just that one move. No, they revalued gold at the same time, from $35 an ounce to $38 an ounce. And when that didn't work, they moved from $38 an ounce to $42.22 an ounce. And when that didn't work, they said, okay, we're going to abandon gold pricing altogether. We'll let it trade on the free market, at which point, of course, gold prices skyrocketed. And what happened to the dollar? Well, the printing press went wild, and of course, rampant inflation came into play, and the dollar was worth less, losing its purchasing power, the system that we still have today. But today, the United States is $36 trillion in debt. Inflation is only accelerating, and central banks are buying gold at record levels. But why? Because they see what's coming next. It's not a recession. It's not a market downturn. It is the collapse of paper money. It is the collapse of an illusion that has been decades in the making. For years, the entire system has been propped up on near zero interest rates, cheap credit, and easy money. But this isn't real growth. This is what has led to the everything bubble that we're in today, fueled by debt and speculation. But you can't print your way to prosperity. Look at the stock market. Companies are trading at insane valuations, but it's not based on fundamentals. And as that cheap credit becomes expensive and that easy money becomes hard, well, what happens? Smart money realizes that it's time to exit, and suddenly the illusion starts cracking. But when that happens, what do governments do? They don't admit failure. They certainly don't take responsibility. No, they reset the game. That's what a gold revaluation really is. It's a sign, it's a signal that the system is so broken that they have no other option, no other choice but to rewrite the rules. Right now, we're seeing massive amounts of physical gold flow into the United States. As Wall Street stockpiles millions of ounces of gold, Switzerland alone has exported almost 200 tons in the month of January alone, the most on record since the 2008 Great Recession. Does that sound normal to you? Why do you think that massive amounts of gold are flowing into the U.S.? It's certainly not just tariff concerns. Let me know what you think the real reason is in the comments below, because I'll let you in on a secret. This is not a system where everything is fine. But if all that wasn't enough, we have London's vaults running dry with wait times for delivery escalating into months, and the mainstream media even talking about a gold revaluation. But again, it's not about the gold revaluation. It's about the collapse of the paper gold market and the collapse of confidence in the U.S. dollar itself. For decades, the gold market has been manipulated through paper contracts, ETFs, futures, derivatives, allowing the biggest players to trade gold without ever touching the physical metal. But the problem is, this system only works if everyone believes that the gold is actually there. But that belief is crumbling for good reason. See, the system relies on only a small fraction of people ever asking for physical delivery. But now you have Wall Street, central banks, big entities, all demanding physical gold. And what happens when the gold isn't there? Well, the illusion shatters. Any of this sounding familiar, like what we talked about in 1971, where foreign countries demanded gold for their dollars, and the U.S. was forced to shut the gold window? It's happening again, only this time there is no gold window to shut, only a massive reckoning to be had between paper gold and real gold, this time exposing the truth of the crumbling U.S. dollar foundation beneath it all. So what does all of this mean? Well, it means three big things. First, the dollar's role as the global reserve currency is collapsing. Now, we knew this, but it shows that this is accelerating as countries like China and BRICS nations move away from the dollar and the entire world moves towards commodities, tangible assets like gold. Second, the financial elite are preparing for something big. Wall Street doesn't just stockpile tens of millions of ounces out of the blue. The U.S. Treasury Secretary doesn't just hint at a gold revaluation, regardless of whether he backtracked for no apparent reason. We are moving dangerously close to a tipping point. And number three, the big one, when governments revalue gold, it's not because they want to, it's because they have no other choice. It means that the debt is so out of control and the dollar has lost so much confidence that they have nowhere else to go. Just like we've seen throughout history, gold revaluation will be the emergency reset button they push when there are no other options left.
We are on the verge of a stupendous financial crisis. And this is part and parcel of preceding the mark of the beast, preceding a Sunday worship by law, a financial collapse, and the setting up of a new digital system. The United States government is over $36 trillion in debt, and the interest payments due on the debt exceeds $1 trillion. There's over $1 trillion in unaccounted real estate loans coming from commercial office spaces that are due this year. There is the rapid revaluation of gold going on behind the scenes as we speak, and the quick de-dollarization coming from the BRICS coalition, a melting pot of digital currencies already up and running. And even though the Trump administration vehemently states that there will not be a CBDC in America, there is the promoting of Tether and the propping up of stablecoin, another digital asset that is just as programmable and trackable as a CBDC. I pray that this message has been convicting. This is only part one of several parts in regards to no buy, no sell, in regards to rapidly fulfilling prophecy, a new system being set up to control the buying and selling of individuals. I pray that you loving Catholics and Protestants living up to the light that you have realize the time we are in, and I pray the Holy Spirit convicts you but also encourages you. Please refer to the previous messages on this channel, the human nature of Christ, righteousness by faith, and the great controversy, encouraging messages on victory over sin, being able to stand through this crisis, reflecting the character of Jesus Christ, and being able to go through what is quickly coming upon us. It is now time to go close in prayer. Most gracious and loving Heavenly Father, $36 trillion in debt, and the interest payments on that debt in America exceeds $1 trillion. A looming commercial real estate crisis, the rapid revaluation of gold all over the world, not covered in the mainstream media, and also the BRICS coalition, rapidly moving away from the U.S. dollar as the Federal Reserve currency of the world. It's only a matter of time before this crisis comes in, and although we do not know the day or the hour, we know that it is near. I pray also, Heavenly Father, your loving Catholics and Protestants all over the world be convicted by the Holy Spirit, but also encouraged. This is not a time to be fearful. It's a time, through the grace of your Son, Jesus Christ, to be prepared, and all glory and honor be given to you. In Jesus' name I pray. Amen.